The completion of the third review under the 48-month extended fund facility arrangement for Sri Lanka allowed Sri Lankan authorities to draw approximately $334 million. To date, the total IMF financial support disbursed to Sri Lanka under this arrangement amounts to about $1.34 billion. The EFF arrangement, approved on the 20th of March 2023 for a total of 2.286 billion SDR, aims to support Sri Lanka's efforts to restore and maintain macroeconomic stability and debt sustainability. The program also focuses on protecting the poor and vulnerable, building external buffers, and enhancing growth-oriented structural reforms, including strengthening governance. Following the Executive Board discussion on Sri Lanka, Kenji Okumura, Deputy Managing Director, issued the following statement. Quote, "Reforms in Sri Lanka are bearing fruit and the economic recovery has been remarkable. Inflation remains low, revenue collection is improving and reserves continue to accumulate. Economic growth averaged 4.3% since growth resumed in the third quarter of 2023. By end 2024, Sri Lanka's real GDP is estimated to have recovered 40% of its loss incurred between 2018 and 2023. The recovery is expected to continue in 2025. As the economy is still vulnerable, it is critical to sustain the reform momentum to ensure macroeconomic stability and debt sustainability and promote long-term inclusive growth. There is no room for policy errors." Program performance has been strong with all quantitative targets met except for the indicative target on social spending. Most structural benchmarks due by end January 2025 were either met or implemented with delay. Sustained revenue mobilization is crucial to restoring fiscal sustainability and ensuring that the government can continue to provide essential services. Boosting tax compliance and refraining from tax exemptions are key to maintaining support for economic reform. To ease economic hardship and ensure the poor and vulnerable can participate in Sri Lanka's recovery, it is important to meet social spending targets and continue with reforms of the social safety net. Going forward, social support needs to be well targeted towards the most disadvantaged so as to promote inclusive growth with limited fiscal space. Restoring cost recovery electricity pricing without delay is needed to contain fiscal risks from state-owned enterprises. A smoother execution of capital spending within the fiscal envelope would foster medium-term growth. Progress to advance the debt restructuring to restore Sri Lanka's debt sustainability is noteworthy. The recent successful completion of the bond exchange is a major milestone towards restoring debt sustainability. Timely finalization of bilateral agreements with creditors in the Official Creditor Committee and with remaining creditors is a priority now. Monetary policy should prioritize maintaining price stability, supported by sustained commitment to prohibit monetary funding and safeguard central bank independence. Continued exchange rate flexibility and gradually phasing out the balance of payments measures remains critical to rebuild external buffers and facilitate rebalancing. Resolving non-performing loans, strengthening governance and oversight of state-owned banks, and improving the insolvency and resolution frameworks are important priorities to revive credit growth and support the economic recovery. Prolonged structural challenges need to be addressed to unlock Sri Lanka's long-term potential, including steadfast implementation of the governance reforms." Unquote.
During the discussion with the IMF, what was the compromise on the SOE reforms? Because they were insisting on SOE reforms in the last government. But you all have said you want to basically change it. So what was the compromise on the SOE restructuring?
Yeah, again, if I just brief it, IMF did not impose anything or force anything. The IMF's concerns, especially when we work within a kind of a constrained framework, the Treasury should not bear the unnecessary cost of SOEs, because when SOE comes out with a particular product, especially energy or any other thing, it should be cost reflective and there shouldn't be unnecessary burden to the treasury, because we had the bad experience of corruption and unnecessary borrowing, wrong dealing, especially Sri Lankan Airlines, the leasing agreement, even the cancellation incurred lots of costs. So therefore, it is a myth that IMF insisted. IMF wanted to have a very disciplined approach towards restructuring. Restructuring does not mean that selling off. So we are working on it. We have just appointed a committee. They are looking after all these SOEs to take the final decision how best we can manage these things without passing or having a burden on the treasury, and meantime to increase the efficiency. And so these are the approaches, and again how best we could utilize all those institutions in order to make sure that there would not be market failures, there would not be any oligarchies in the market, and to ensure that we would be able to provide goods and services to the market at an affordable rate, continuously in good quality. So this is the line of dealing with SOEs, and that restructuring process is going on.
And for the next trans minister, what are the key benchmark we have to accomplish before the next IMF?
Actually, that depends on the next the review, that the fourth review. So immediately after this, the release of the fourth tranche, the fourth review will start probably in April. So during that, so the things are open for discussion. But while continuing the existing benchmark, already certain benchmarks are there. Some alterations can be done from time to time depending on the requirement. For instance, the building external buffer, the reserve. So it is not mere statistics or deterministic science. It varies from time to time. So then and there, by assessing the given situation, we would discuss. We are very open, and that could be seen in the fourth review.